Ladies and gentlemen, welcome. Hi, I'm the Crypto Crow. It is Monday, and we're going to be talking about exit strategy. I get so many messages asking me, Crow, when do you exit? When do you know that the peak has happened? Is there a peak? What do I look for? So this video is for you. I'm going to break down the top indicators to basically fill you in on what to look for to know when the market has officially peaked. Now, we know from the last market cycle that we actually had two peaks in that cycle. I don't believe that we're going to see the same thing here. I also want to point out that when Bitcoin peaks, which is what all these indicators target, Bitcoin typically peaks first, and then the altcoin market starts to run because the liquidity from Bitcoin's profitability starts to flow into the altcoins for a blow off top in altcoins. Once those peak, which typically takes like a month to 2 months after Bitcoin's peak, then we basically, we get that big blow off top and then everything starts coming down rather quickly. So there's kind of a strategy to that. Typically, I'm looking for the Bitcoin peak first, and then I might exit my Bitcoin. Then I'm going to wait and I might set stop limit orders on my altcoins, let them rise up and work out maybe a trailing kind of stop loss, if you will, so that basically as the price is rising, I'm watching it day to day. Once it drops a certain percentage, I might exit. Even though there's a lot of ebb and flow in the market, that's typically what I might do. So we're going to look at all the indicators to kind of point out when the market is likely peaking, and hopefully this helps you guys plan for 2025 or whenever this may happen. The first thing that we're going to look at in this video is the Bitcoin stock to flow model. This is a very, very solid, tried and true. Basically, it's an indicator that shows you how Bitcoin flows in, kind of your what's the best, like your demand versus supply and all of that, and how it basically affects the price over time. As these halvings happen and there's less Bitcoin entering the space, how that changes the demand of the project or the demand of Bitcoin over time. And you can see here the different peaks in the various market cycles to date, right? This here is a 2011 peak here. We've got a 2013, we've got 2017, and then here we have, it's interesting, right? Because rather than having one significant peak in each of these, we basically had a 2-peak cycle. And as a matter of fact, if you look here, it almost seems to go back and forth. So if we look at 2011, then in 2013, we kind of had a weird situation that was kind of a 2-peak, widely spread 2-peak. Then in 2017, we had a one single peak market, and then 2021 we had a 2-peak market. But the ultimate gist of it is when the price action, end of day price action dots start changing colors and transitioning from a very dark bright red and moving into like an orange and yellow and green, those basically are giving you kind of the layout on what's to be expected. So when these dots continue moving up and they break through this line, this price line average here, that's basically when the market is known to have peaked. Now, when it just breaks out, that's not to say much. You can see here the price broke out. So let's go ahead and highlight this a little bit, maybe make this a little bit bigger so that we can kind of see what's happening. You can see the price broke out here at around 27,000, but that wasn't the peak. This little peak here was around 39,000, and the price continued moving all the way up to around the 64,000 mark. This was the 2024 peak, or 2021. And then it just basically, this went sideways and consolidated, started transitioning out of the dark orange into the yellow and all the way down until we got to green, where the green was basically the bottom. This is where, hey, this is a great place to start accumulating again if you want to start working towards the next cycle. So here we are now in the orange. We have some ways to go, okay? If you look at the range by which the price action moves and these bubbles transition from color to color across, once we break out of that line, just looking at this, it looks like this could happen maybe somewhere around, the February of 2025, maybe something like that. Could happen much later. We'll have to see, because the ebbs and flows of the market change all of this. So but it's my guess that we're going to end up peaking somewhere around here. But we'll see. Okay. It could be, I'm going to say definitely within the first half of 2025. I think it's going to likely start at the end of the first quarter of 2025 and then move into the second quarter of 2025. I do not think this is going to be an elongated bull. I used to think that there's potential for that. But I think if we're going to reach a real super cycle, I think that's probably going to be somewhere in the 2030 market. Because I think at that point, we're going to have so many new real world assets and so many new use cases that have been adopted on the foundational blockchains like Cardano and potentially Hedera Hashgraph, HBAR, all that we're going to start seeing a lot of these international use cases for Internet of Things, AI, all of these different use cases really start to be established in the market and widely used by a large number of people. I think this market is about laying out the plans for what's to come in 2030. That's what I think is happening. We've got all of these narratives that are pushing for AI, real world assets, the tokenization of real world assets onto the blockchain and what have you. And I think now it's about establishing policy, establishing which blockchains are going to be most useful in those use cases on a grand scale. And then those are going to be the ones that obviously pump probably the highest moving into this 2025 market cycle peak. And then it gets to building, and then it gets to adoption and basically growing that adoption as we head into the 2030. So that's what I think is happening. But this stock to flow model is pretty accurate, and this is one to keep an eye on. Okay, so the next indicator on this list is the Pi cycle top indicator, which has been one of my favorites for years now. And if you look, we're going to go ahead and refresh this and take a gander. You can see here that when this blue line crosses up over the purple, that is when the market peaks. That's generally when the market peaks. Now, in the 2021 market, because we had two peaks, we had the initial peak on, I think it was like April 13th. I can't remember the exact date. April 13th, I think was the date. April 13th, 2021. That was the initial crossover. This doesn't necessarily dictate a second market peak, which we didn't see here in like November of 2021. We had the two peak market. It called the first one. We had a pretty significant correction. It was kind of a fake out. And then we ran up into another rally and peaked a second time for that market cycle. As I pointed out in the past, that this price action matched the 2007 NASDAQ charts identically. And so, those that follow me on Twitter, you basically got this call the day of, and I basically called that this was likely going to be a two peak market. So if you're not following me on Twitter, you're not helping yourself any. No, I'm kidding. There are a lot of really good people on Twitter. So anyway, that's what we're looking for. So effectively what we're looking for now in the current cycle is you can see this blue line down here, all the way down here. You see that wide berth. Well, we want to see that blue line cross over that purple to signal that Bitcoin has likely peaked. Again, you're going to have access to all of these links. I'm going to leave them down in the description below so that you can go bookmark them. I'm also working on an indicator that is it's basically another confluence indicator, so that when more than one of these trigger at the same time, then you're getting an indication, hey, the market's probably peaked. You might want to do something about that. So the Pi cycle top indicator has been very, very accurate so far to date in every market cycle. So we'll see what happens. I don't think we're going to have a two peak cycle this time. I really don't. I think we're going to have something more akin to the 2017 market cycle, because they seem to rotate. One peak, two peak, one peak, two peak. And I don't know why that is. I don't know if it's a part of the algorithm. I don't know if it's a part of market sentiment and adoption. It could be a system of patterns that's similar to something like the Fibonacci or something to that effect, the Elliott wave. So I don't know the science behind it or why, but that definitely seems to be the pattern. Okay, next on this list is the Bitcoin rainbow price chart. Okay. And you can see here, this is basically a logarithmic price action chart that's showing the long-term price action of Bitcoin over time. And then in this are the different halving timelines and what happens to the price after. And every one of these I would consider like a sector is a different color. Okay, so when the price is down in the purple, that generally means it's time to accumulate. It's time to this is the bottom. This is when you want to really get in. Okay. And so from there, let's see, what was the bottom around here? This is 2022. Yeah. So, the bottom was around 15,750 leading into this market cycle. And you can see here the prices at the top of these cycles, 67,000. I don't think it was ever 67,000. What is that? Sell, seriously sell. Yeah. So basically what the point is that as the price starts moving into the lighter colors and into yellow, that's basically a signal like, okay, get ready because this market is really starting to get its blow off top and be ready to exit the market. Once it starts moving into the orange and then and getting into these areas, this is where like people are already starting to sell a bit and the buy pressure starts to wane, okay? Because it's at new all-time highs, it's moving pretty quickly, but then it starts to slow down and everybody's like, oh, this might be it. I think I'm going to get ready. I'm going to start averaging out now. And by the time it hits the red, that's it. You're out because it's not going to go any higher. You'll see though, in this two peak cycle, we didn't get into the red. We didn't even really get that deep into the dark orange. Like we got into the red in these market cycles. Hell, we even broke above that in this 2013 cycle, right? So there can be variances, which is why a confluence of these indicators is key. You want to make sure that you're not looking at just one particular thing, but you definitely want to be prepared just in case one hits and the other one hasn't hit yet for whatever reason. You also have to keep in mind, even as I address the pi cycle chart, is a lot of people will say, well, this should start closing by this date, right? The thing of it is that when there's a correction in the market, which we often see a 20 to 40% correction multiple times, we might see 2 or 3 corrections in the bull cycle for as high as like 40%. All right. And those always freak people out. But what that does is it pushes the time frame for accumulation and price go up longer into the year, longer into the cycle. So you want to pay attention to that as well, because it's not unheard of that we have multiple corrections in a bull run for as high as 20%. So don't freak out when you see it, especially if a lot of these indicators haven't started hitting yet, or maybe they're not even close. Then a lot of us just don't worry about it so much. But when those things happen, that shakes out the weak hands. That shakes out the people that don't know any better. They start to freak out. Maybe they just recently bought in. The market starts correcting. People don't know what they're doing and they start dumping. And then the price goes back up. It's a lot of shakeouts and fake outs, which is why a lot of these indicators are very valuable to people that are paying attention. So anyway, once we start reaching into the orange, though, that is probably, if this works in confluence with some of the other indicators. So in other words, if the pi cycle is getting real close to closing over, and this is in a dark orange, that's probably an indication that we're about to peak any minute or any day. If one is very distant while the other one is like looking like it's going to move into a trigger point that indicates a sell, then, maybe that's what you want to do. It just depends. It depends on your risk aversity. How dangerous do you want to get by squeezing out those last bit of potential profits before, either a big correction or just the peak of the market. Okay, so now in this list is the monthly RSI, the relative strength index. You'll see the price right here on TradingView, and you'll see this indicator down here. You'll also notice I've got an orange or a yellow line rather, which to me is like caution. Okay. And then you've got the green line at the 90, right? So I'm looking at an 80 yellow line, which is like slow your roll, caution, this light's about to change. We go from 80 to 90 and we get a sell. On a monthly RSI, and you can see we're working our way into that now. We're working our way into the 80. But what also happens is if we get a significant correction in the market, it pushes this RSI back down. So it could get real close to this 80 mark, but not touch it, not cross over it, and we get a market correction. And at that point, the price will come down a bit. And while that's coming down, this RSI is going to drop as well and kind of give us a little bit of a reset. And it'll take that much longer for the price to move up from there. A lot of this is momentum based. And a lot of these things can be lagging indicators, while some of them can be leading indicators. It just kind of depends on what's going on. But if you look here, down here, the price was at, this is around 76, right? And we had a long ways to go before we actually hit the peak of that market. So, just because the price breaks above the 90 doesn't mean you sell right away. That just means the price is likely going to be ready to sell. It's likely peaking. This got almost all the way to 100 in 2017. And I believe that that's something similar to what we're looking like now. And you can see here when the April peak hit, the monthly RSI got up to about 94. So those are the big key indicators. And then you can see when we dropped from there, the price dropped, RSI plummeted all the way down into the 60s, the low 60s. And then it started working its way back up for what was the second peak. So you can see how the price can move up and even reach a new high without the RSI getting back to even the 80 mark. So this is why confluence is such a big deal when you're looking at a lot of these indicators to judge when the peak is happening or not. And just because the market, maybe some of these indicators do peak in a confluence telling you like bing, 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 all three of these things are hitting, that may not necessarily mean it's time to exit everything entirely. It could be a really good opportunity to start averaging out maybe a phase 4, or 4 phases where you're going to dump 25%, dump 25%, dump, just because if we get a reversal like we did in the 2021 market, that reversal will obviously help you, not miss out on some of those potential gains. Okay, so finally on this list, we're going to look at the monthly MACD. Now, a lot of traders love using the MACD indicator for trading the ebbs and flows of the market, right? The ups and downs. And we're going to look at this in the form of a monthly indicator of what's happening in the price. You can see here all the way back in the 2021 peak, the initial 21 peak. This is when the pi cycle top indicator triggered. A lot of these indicators were saying the market has peaked, and it did, but nothing quite indicated that there was going to be a second peak in the market. Well, if you're looking at the MACD on a monthly, you can see this blue line here, this blue moving average. That didn't conclude the market until right around here, where the blue line crossed down over the orange, indicating the market is done. And it was done. But what you didn't see is you saw them cross over all the way back here at the beginning of this cycle. Okay. So when this initial April 13th of 2021 peak happened, the blue didn't cross down over the orange yet. It was still reaching for new all-time highs, and it started to dissipate, right? But around the time when this second peak happened, this MACD went solid green again. It transitioned out of the light green, and we started getting volume back into the dark green. It wasn't until the volume of this started really dissipating that people were like really calling bottoms. Okay. So, and then you saw when the market bottomed out, we started transitioning from this dark red territory into the light pink. And then we started moving into the dark green, and away we went. So right now we're in dark green territory yet again. Okay. So if you look here, we're basically in the first bar of dark green with heavy momentum. And you can say that we're right here. We could potentially have 1, 2, 3. This was 3, 4, 5, potentially 5 to 6 months before this next peak. So that's what you want to look for. When the histogram is basically forming new highs, it's still moving. It's not until really you start seeing this transition down into lower lows where the market is peaked, or you get a big crossover of these moving averages. If these moving averages actually cross over, you probably already missed the peak and you're on your way down. That's what I'm basically seeing here, and we still have a ways to go. But these are some of the things that you definitely want to keep an eye out for, because you're going to have a lot of people. To give you an example, and I know a lot of people give me they joke with me because I mention this all the time in videos, but when I called the peak in April, everyone was flaming me. Everyone was like, you're wrong, you're an idiot, you don't know what you're talking about. I caught so much shit because I'm like, the market just peaked and everybody thought I was trying to be cool, right? Like I was trying to troll. And I don't say stuff like that to troll people. That's never been my bag. So you're going to get a huge bunch of people, especially people that are new, right? Because they're thinking, there are a lot of people in the market that just bought in a month ago. They're late to the game. They don't know anything. They don't know what they're doing. They don't know what they're talking about. And the last thing they want is somebody that they feel may be prominent in the space telling them their days are over for getting gains. And that's it. Because especially depending on when they get into the market, they didn't buy like Cardano at 2 cents when everything was bottomed out. You know what I mean? They bought Cardano at $2 or $2.50 and it peaked out at $3 last cycle. And they're like, I just bought in a month ago. There's no way this is over already. So you get that sentiment where it's just like, it's that, I don't know, holier than thou. I don't know. Like, this can't be happening to me. I just got in. There's more money to be made. I don't believe you. But they're not really paying attention. Back in 2017, when Charlie Lee and Litecoin, basically when he dumped his entire position at the peak of the market, everybody was like, how dare he? He's such a traitor to his own crypto, right? I was one of them because I didn't understand it yet. I didn't understand how the peaks worked. I didn't understand how these 4-year cycles work completely. And so I thought he was just dumping on all of the people he got involved in his project. And he's like, listen, the market peaked. There's no point in holding it. This isn't anything personal. This is just the way the market works. So the more you understand about what to look for and what you're doing, you don't have to worry so much about the noise of everyone else, because a lot of people in the space don't have a clue what they're talking about or what they're doing. I know enough after 7-8 years in the crypto space. I know enough to know I still don't know anything, but I at least know enough on how to be a lot more productive with what I'm doing in the space. And I'm confident enough in what I do know to not listen to the noise of a bunch of anonymous people on the web that are hoping for something different than what reality might be bringing them. So until next time, thanks for joining me. I hope this video helps. Make sure you bookmark cryptocrow.io, which is where I'm going to be basically linking some of the tools that I'm going to start putting out to try and help you guys find the cycle the cycle peaks without having to jump through a bunch of different hoops and windows. So until next time, crow your coins. Thanks for joining me. Happy Monday, and I'll see you again soon. If you'd like to read news about politics, cryptocurrency, finance, tech, artificial intelligence, gaming, and more, check out twistedtimes.io. This is my news website that I've created that utilizes artificial intelligence, RSS feeds, and rewrites the news in a non-biased way that just gives you the details about what's going on in the world. Any one of these articles is going to be comical, interesting, a fun read. You're going to learn a lot. It's real news. None of the details have been changed, just the way it's been written, so that it doesn't basically brainwash you or insult you while you read. If you're an intelligent individual that just likes news for what it is, just to know what's going on in the world, check out twistedtimes.io, bookmark it, check it every day. New articles flow in constantly. Thanks for your support, and I'll see you on twistedtimes.io.